Hi, my name is Amanda Terry. I'm the managing partner of ACTAI Ventures. We're an early stage fund that is using digitization to make industries more efficient and processes more scalable and replicable, and also using technology for good to help solve challenges aligned with the UN SDGs. I am thrilled today to be with one of our portfolio company CEOs, Sean Clercq. He is the co-founder and CEO of Kickfurther. Welcome, Sean.
Thanks, Amanda. Great to be here.
Yeah, thanks for taking the time. As I was saying before the camera started rolling, these are really just an opportunity for us to have a chat, really for some of our investors to learn more about Kickfurther in your own words, and hopefully inspire other entrepreneurs that want to maybe get into become an entrepreneur. So, any insights from you as a successful entrepreneur, I think much appreciated.
Awesome. Thanks, Amanda.
So, yeah, maybe you could start off a little bit about your background and then, why you started to start Kickfurther.
For sure. So my background, I feel, very lucky. My parents were both entrepreneurs. They started their own company. It was a supply chain management company. And so I really cut my teeth in that world, right? Learning how you essentially buy stuff from overseas, right? And global supply chains and tying that all together. I went from there to starting my own merchandising company, which is, again, pretty basic, not too exciting, but, buy for X, sell for Y, and you make a little margin in between. And as that business scaled up, we encountered this inventory finance issue where we had purchase orders, for $350,000, but I had to come up with $110,000 just to book my production slot, and then another $110,000 to pay for the production once the goods were delivered. And it was this massive $200,000 finance issue for one of the biggest revenue opportunities I had for my company at the time. And there just were no good options in market. So, we went to PO finance. It was extremely expensive. As I recall, it was about a 5% discount per month on our purchase order. And we went from a growing, profitable, in the black merchandising company to losing money on every single purchase order that we had to finance. And it just occurred to me that, it was this weird situation. It was the 0% interest rate environment. And it was like, how can my money in a bank be worth nothing? But at the same time, it costs my business 5% a month, 60% APR. To finance my inventory. So it felt like there was a market inefficiency and an opportunity to solve that for myself and for other entrepreneurs like me.
And when did you start Kickfurther?
Oh man, now it's a decade ago. So it's our 10-year anniversary this year. We started in 2014.
Oh, wow. Wow. Okay. And just for anyone who doesn't know what Kickfurther is, briefly explain, what does Kickfurther do?
Yeah, so we started out very simple, just connecting people who want to support the growth of entrepreneurs with product businesses that need inventory to continue to grow. And as the business has grown over the years, what we've really honed in on as an opportunity is to think about inventory being the underlying asset that is underpinned kind of trade, right? Which is one of the greatest wealth creation engines that's existed for hundreds of years now. But inventory as an asset, it's not really an investable asset class right now. And we think that there's a huge opportunity to turn inventory into an asset class and open that up for family offices and individuals to participate in this wealth creation engine around the world and simultaneously solve this pernicious problem of inventory finance for, the hundreds of thousands of product entrepreneurs in the US and, the millions of them globally.
And how many businesses have you helped since you started in 2015?
Oh, I should know that number better. It's probably at this stage, I would say it's close to about 1,500 product businesses that we've worked with at this point, somewhere around there.
And all in the US based, right?
100% US based right now. Yeah.
And for any product entrepreneurs listening to this, is there kind of a sweet spot that works well for those companies trying to get financing from Kickfurther?
So, we think about our ICP, our ideal customer profile, as being businesses that are in that, most typically right now, businesses that are in about a 3 to 5 million of trailing 12 months revenue range, with, usually these are companies that have small teams, two to 5
GMV
person teams.
or that's the end revenue?
Revenue, yeah,
okay.
typically
yeah,
in the revenue,
okay.
exactly. Yeah, so they're typically small teams. The founders are super busy, and the last thing that they want to be thinking about is, how do they continue to finance their growth, and it ends up taking up a huge amount of their time. So we work well with these businesses that are hitting that growth curve and are looking for a long-term, ongoing inventory funding solution for, one of the key capital constraints for these product entrepreneurs is inventory finance. So we try to connect them with people that are happy to participate in and support their growth, and that's been good for us. But we work with businesses as small as $500,000 of trailing 12 months revenue. So the real rising stars, we're very happy to bring into the community as well.
Okay. I know you've been using a lot of artificial intelligence to kind of help qualify businesses. When did you start using that? And can you talk a little bit about how you've set up those algorithms, how you're getting the data, and how it's working for you?
Yeah, so this has been a project now. We kicked off the whole, really the data, cleanup and normalization started all the way back in 2021. And we deployed our first version of our machine learning model, which we call the Kickfurther metrics model, or the KMM, was in March of 2023. So it took a good amount of time to build all of the right infrastructure, get all the be able to compare the data apples to apples across all these businesses that we'd funded. We ended up ingesting about $230 million of qualification and performance data into the initial release of this model. And we built on top of that an open banking API. And what we've developed is, we used to have this scorecard, which was good, but what we've developed now is just miles better. And to me, one of the most interesting things is how machine learning, we use a non-linear machine learning model. And what's really interesting is how, back in the days of a scorecard, it would, we would kind of think like, oh, more revenue equals better, right? Like very simple kind of heuristics. But the machine learning model is able to suss out these patterns in the data where, it's like more revenue is usually better, right? But if you have more revenue, but you also have a lot of small debit transactions, like $50, $70, 120 that are coming out of the business bank account, that usually indicates some kind of financial mismanagement that's going on, right? Like they're using their business as a personal piggy bank, and that has signaled risk for us, because then if there's any issues, right, then all of a sudden, issues in their personal life can affect their business, and so on and so forth. So finding the way the data tells a story, and then when you see the patterns, you can kind of think of what the narrative is of why those patterns make sense, and that's been really interesting to see over time.
Oh wow, interesting.
Yeah.
Okay, and so what happens though if one of these co-ops goes sideways? Like, what does Kickfurther do for the people that have invested in those co-ops? What are you doing as a company?
So I think one of the underlying, it's barely even an innovation. We didn't invent inventory on consignment, but that is the underpinning of what we do. Is it's people are buying inventory at cost. We fund inventory at 100% COGS, which is relatively rare, and that inventory is then placed on consignment with product businesses. As they sell through that inventory, it triggers the underlying consignment agreement, and they're required to pay back based on the inventory as it's been sold or depleted, right?
Okay.
Like if you go and you send it out as a sample, which is pretty typical, that counts as you consuming the inventory, and you're required to pay on the consignment contract. So the benefit of consignment is that we're funding inventory at 100% COGS, but the benefit for our funders on the other side of the arrangement is when you own the inventory and you're actually taking inventory risk the way you do with consignment, you have the most senior secured rights on that inventory. And so what we've been able to do very successfully in the events that, something happens and for whatever reasons, we see that the inventory is depleted and the invoices aren't getting paid, is we've been able to essentially intercept the payments by leveraging these very strong consignment rights, right? And going to the point of sale, whether that's Shopify or Amazon or Walmart or whoever else received the inventory, and essentially pulling those payments out of the payment flow direct to Kickfurther and then distributing that to the funders. And so
Oh, great. Okay.
we're, kind of like the way I think about it is when you've got these all asset liens, which are typical for other financing platforms, you're kind of like secured against the whole body, right? Like the arms, the legs, the feet, the real estate, whatever, right? And I think about it as we are funding the lifeblood of these businesses, and we're secured against that ongoing heartbeat of the business, of the inventory transactions.
Right. I mean, inventory financing, as you said, you experienced the challenges of that personally, but what is that total addressable market? Like, what does that look like in the U.S. in terms of a challenge for product entrepreneurs?
Yeah, I mean, if you look, I would argue that almost every piece of merchandise is getting financed. Like it's quite rare that you have like product businesses that don't have some form of financing that's helping them grow their business. It's like the founder of Nike talks about this very famously in Shoe Dog, where it's like the ongoing constraint to his growth was getting enough finance to serve demand for his customers, right? So, in the U.S. market alone, you're looking at a $4 trillion of product business, retail business every year or so.
Wow.
And if you think about that, it's like average 50% margin, maybe $2 trillion of inventory assets, Our current addressable market for that is, a smaller portion thereof, maybe 150,000 product entrepreneurs that are kind of right in our ICP today. But we also think that consignment, at scale, again, if you have this view of, hey, we can turn this inventory that's being sold everywhere into an asset class for family offices and, funds and hedge funds to participate in, I think really it's like kind of the sky's the limit,
So let's talk, because I remember meeting you in 2015, and then I think it was you had competed in the Extreme Tech Challenge and one of the finalists, right, on Necker Island. I think that's where we kind of connected more, and I ended up wanting to invest, and I think Bill came, and Bill's on your board as well. Back then when you started the business, it was much more kind of consumers deciding to fund products that they were fans of, right? So like, oh, I know I can get a higher interest rate funding these co-ops than like stashing the money in my bank account, right? Has that model changed over time? Like, do you still have a lot of backing from individuals, or you kind of mentioned family offices, hedge funds, more institutional capital also seeing this as a interesting asset class?
So I think for us, it's we still serve those individuals, right? And I do very much believe in this idea of the wisdom of the crowds. Actually, one of the data points we're looking at incorporating into our model, if I can figure out how to do it, is we have found that co-ops with higher participation, where more users are funding them, are more successful. But the problem with that is that we don't know how many people are going to fund it until we've qualified the deal and launched it on the platform. So that's kind of like a problem I'm thinking about how we solve right now. But I very much believe in this idea of the wisdom of the crowd, that 1,000 brains are going to make a better decision than any one brain at a time, right? Regardless of how smart it is. So that was an underpinning idea of what we had in the early days. And, that gave us all this transaction data where we were able to create this brain of the Kickfurther metrics model, the machine learning model. We still serve that market, but the reality is working with individuals and trying to get individuals to participate and, essentially save more, right? Which I think is a good thing. Everybody should do it. It's a very different problem to solve than what our current mandate is, which is to provide the solution to as many product entrepreneurs as possible, right? And again, to turn inventory into this underlying asset that anyone can participate in. So I kind of view it as we continue to go down the path that we're on, and we leave this solution available to the market at large, then those people will become an ongoing part of the heartbeat of the company. But the reality is that family offices that are willing to support with a $10 million capital allocation into the marketplace, that's a lot easier to manage than 10,000 individual users that are all putting in $10,000 each, right? So for us, it's just an operational question of what makes the most sense for us to most directly solve what we're doing today as an organization.
I remember way back then, it was kind of like this chicken and egg. Obviously, then your marketplace, it's like finding the businesses and then finding the funders. Where are you at now? Are you still like is the challenge B2B lead gen, finding the product entrepreneurs? Is it more of the financing from, as you're saying, kind of more institutional clients, or what's the balance of the marketplace currently?
You know, one of our
Or you say both?
Yeah, exactly.
Both.
It's always
You're always looking for both.
It's
More
always
product
both.
and more funding.
It's one of our board members, John Donovan, and a longtime mentor and advisor for me. He describes it as a pendulum, right? So it's always, you've got this pendulum, it's always swinging, right? So very recently we were looking for more liquidity, more participation on the marketplace. The pendulum has swung. We have sufficient liquidity, and now it's about finding as many qualified businesses to fund their inventory through our solution. But I'm sure, you know, in time, the pendulum will swing again. And, you know, it's kind of like constantly keeping up and trying to keep one side. You want to try and match them as closely as possible, so you're not wasting any resources on either side of the organization. But inevitably, right, you get a bit of a swing over time.
What is the marketing, like, how are you finding those product businesses, right? These entrepreneurs that are maybe struggling with inventory financing. Where do you find them?
I mean, so some of our best channels are through partner referrals, right? So we work with businesses that work with product entrepreneurs, whether they're packaging companies or, you know, patent lawyers or stuff like that, or even like finance groups that work specially with product entrepreneurs. So, you know, we have a very innovative solution. Again, funding inventory at 100% COGS is quite rare, right? Taking that burden of having to fund inventory for a product business off their balance sheet is a pretty special thing. I think we're pretty much unique in doing that for the market that we serve. So partner referrals has been like a wonderful growth channel for us. Client referrals, you know, we invest in content marketing. We go to trade shows, right? So where these product businesses are going to try to meet buyers from Target or Walmart or UNFI, right? Where they're trying to promote and sell their products. That's usually a really good time to introduce them to a funding solution for that inventory. So trade shows has been great. And then as with any business, I think we are investing in a digital strategy on an ongoing basis. You might see our ads on, you know, social media a little bit more often. If you go to our website, you know, we're working on all of those digital marketing efforts as well. But I would say digital marketing is extremely competitive in our space, right? Because you have these debt guys that borrow money and then they have to pay for that money, right? There's like allocation costs once you borrow money. And so once they borrow, they spend a ton of money on social media to deploy it as quickly as possible, or on search engine marketing to deploy it as quickly as possible. So we do find that digital has been a consistent, strong channel for us, but it's also typically a higher cost and a little bit more of an expensive channel for us. There's a lot of activity there in our space.
Got it. Just because some of our investors in the fund actually were some of the early kind of extreme tech challenge, and they're even still running extreme tech. Like, how did that change it, or did it change the trajectory of Kickfurther, and how? And then my other question is kind of, I know you were also you're very competitive in the 43 North competition. So maybe talk about Extreme Tech Challenge, 43 North. How did those competitions help grow Kickfurther and kind of help your business?
Yeah. So one, Extreme Tech Challenge was just awesome, is what I'll say. It was like such a cool experience. We got to meet one of the judges at Extreme Tech Challenge in early 2015 was Tim Draper. So he was a judge at CES, and Tim eventually funded so that was early 2016. Tim funded our seed round in 2017. But that was our first point of contact with Tim, was as a judge in the Extreme Tech Challenge. We reconnected later in the year when we were opening up our seed round. So I would credit that association there. Again, super fun going to Necker Island, meeting a bunch of really interesting people, like just having the opportunity to kind of expand your perspective and see, you know, sometimes it's like seeing how everybody else is dreaming so big, right? And seeing the ambitions, being surrounded by that kind of class of entrepreneur, I think, you know, makes it almost easier to, you know, kind of like dream big yourself, right? So I think that was influential. Of course, Bill invested right after in early 2016 as well. Bill has been, I mean, I can't say enough of what a powerful supporter Bill and ACTAI Ventures has been over the years. So I think it would be fair to say that the business would look very, very different, maybe might not exist had it not been for that support in those early years and the ongoing support through the years. So that was hugely meaningful. And then, I think that got us to a point where in 2018, we had reached a point, the business had gotten, it had made some changes. We had, like the businesses we were funding back in the Extreme Tech Challenge, we were doing like very small businesses, right? A couple $100,000 of revenue, right? So the ICP had shifted, some of the market dynamics had shifted, but by 2018, we competed in 43 North, and
what is for anyone who doesn't know, what was the 43 North competition? Tell people a little bit about that.
Yeah, I mean, so 43 North is it's an economic development program for Buffalo, New York. They bill themselves as the largest startup competition in a year. They give away $5 million every year, and you have to, if you win, you have to move there with half your team. So back in 2018, Kickfurther was one of the winners. I moved there with 2 of my team members. We were 6 people back then, and that was great. I mean, 43 North, they're a super welcoming community. They have some really awesome sponsors like M&T Bank. The CTO of M&T Bank, Mike Wisler, joined as one of our advisors that we met through the 43 North program. We won a prize with 43 North, and then we also raised an additional convertible note on top of that. So it gave us the runway to start to really build out the marketing engine that's been quite successful for us. We found some excellent talent in Buffalo, New York, that gave us the ability to continue to build out the business and kind of do what we needed to do. And they connected us with further capital sources, as is so important for startups at that stage, where later on in 2020, Impellent Ventures, David Brown invested. He led a preferred shares round, and I have to give him a lot of credit. He literally, the whole world shut down on March 31st, and he gave us the term sheet 2 weeks later, which I think was a very bold move, and I'm very appreciative of that. He then introduced us to Tom Golisano. So Tom Golisano, founder of Paychex, invested in Kickfurther in early 2021. And, Tom saw a lot of parallels with what we do at Kickfurther with what he did at Paychex, right? So Paychex was bringing these payroll solutions for big companies down to small and medium businesses. And, now they're worth $40 billion publicly traded, somewhere around there.
Wow.
And he saw, inventory finance is this big problem, and you've got these big banks that are serving big enterprises, but who's solving that problem? Who's got the, solution for small and medium businesses? And he thought with what Kickfurther is doing, that there was a real opportunity to create a space in the market with our solution. So after Tom invested, he joined the board, so with Tom and Bill on the board, John Donovan on our board, we've been...
Right, he was one of the co-founders of Lending Club.
One of the co-founders of Lending Club. He was at the, CEO of Lending Club pretty close to when they IPO'd. And, having that board structure, having people that have, really been through it before, seen it, in so many different shapes and sizes, I often tell people, I'm like, you can't pay a consultant for that kind of advice. You know what I mean?
Right.
It's
like decades of battle scars.
Exactly. It's like
and wins.
So much experience, and it's experience that's like hard fought and hard won. It's like not paid for. So I'm hugely appreciative of that. Being able to have the mentorship and the guidance from a guy like Tom, who was on our board for a year and a half, and yeah, I think that was hugely impactful for us. So, between M&T, Tom, and, continuing to be able to attract talent and grow in a city like Buffalo, which has been hugely welcoming. I'm very grateful to the 43 North community as well and organization.
Amazing. And I mean, just to double click a little back on, you're collecting all of this data on product businesses over the last 10 years. You now have machine learning models that are helping you figure out, which ones to best invest in, and you're getting a lot of learnings on those. Have you ever thought about kind of sharing those learnings with other product entrepreneurs? Like, what are learnings from the Kickfurther standpoint? Obviously, it's a little more on the inventory finance side, but are there traits of successful product businesses that you could share that you've seen kind of from the Kickfurther data?
Yeah, I think what we've seen is that definitely one of the things that we've seen is businesses that can command pricing and have figured out their underlying growth engine are businesses that can succeed over time, right? And the idea is, it kind of sounds almost trivial. Mark Andreessen said this like a million years ago, right? But he's like, raise prices. He's like, if there's one piece of advice I would give to any entrepreneur, it's raise prices. And I think that that's like really interesting. I think we've seen it ourselves where a business that can command strong margins, right? What it does is it not only provides all of this financial stability and resilience, right? Because inevitably with any business, you have these market shocks that happen, right? We've seen it happen in COVID in 2020. Supply chains just got totally out of whack. There's some whispers that it might be happening soon now with like maybe some strikes that are coming in America, like who knows? But the one thing you can count on is that there will be market shocks, right? And if you can raise prices, if you can command higher margins, that makes your business more resilient to those market shocks. And I think like a mistake that I've seen entrepreneurs make is just to assume, right? Like, oh, as I ramp up production, right? As my order quantity gets larger, my costs will go down. And it's like, yes, that is true, right? As you go from buying 5,000 units to buying 50,000 units, one of your costs, which is your cost of goods, will go down, right? Your cost of goods, your freight, that will get cheaper, right? On a per unit basis. But the reality is a business that's selling 50,000 units has other costs that need to be paid for, right? Eventually you need to have a marketing team, and you want to have salespeople and business development, or as you open up wholesale channels, you're looking at co-marketing costs with retailers, and wholesale has thinner margins than direct to consumer, right? So these businesses, as they evolve over time, I think a common fallacy is just to assume that with growth, everything will be solved. And very often what you see are these businesses that they grow, but they're operating on just these really fragile margins. And then one shock hits the market, capital dries up, maybe interest rates go from 0 to 5.25% in a year. And all of a sudden, everything they built their business on, like starts, it's on this like fragile kind of fragile foundation, right? But if you can increase your costs, if you can command margins, you can build resiliency. And I also say, I'm on a lot of podcasts where I talk about building redundancy, right? Like don't wait for the problem to happen, like know where you would want to have redundancy. And of course, my supply chain background, I'm always thinking about supply chain redundancy. And the other thing about raising prices that I think, is smart is, if you really have great product market fit, if you've got something really special, you do have pricing power, right? And so that almost helps validate, like, this is something that can grow big, because if your core early consumers are willing to pay a higher margin for it, right? Then that means as you expand out the market, you will be able to continue to grow, you'll be able to continue to find consumers. Whereas, businesses that you see that are kind of like in a race to the bottom on prices, I think that's extremely challenging. And in a lot of cases, there's other companies that have these economies of scale working in their favor. And once you encounter them in market, it can be very challenging to overcome that, right? So, for entrepreneurs that are getting started, like target a 75 and 80% margin, right? It seems like a lot, but that's going to give you resiliency, and it's going to build out a business that has more optionality, right? You can discount, you can open up wholesale channels, all of these things that are a lot easier if you can command a higher price.
Great insights. Yeah. Well, thank you again for spending some time with me and our ACTAI Ventures audience who will see this eventually. We're just it's been really a pleasure and honor kind of following your journey from 2015. I mean, we're almost at like 10 years
Exactly. Yeah.
of history, and seeing the growth of Kickfurther, and just excited to see what's to come in the future. You guys are doing a great job, so keep building. Obviously we believe this is a huge market, and you guys are doing a great job executing.
Thanks, Amanda. Thank you for all the support over the years. I can't say it enough. This has been awesome.